Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
I'm telling members, listen, if we can get above 60.50, I think we start to get into an interesting place, right? So we're going to go from that short to neutral gamma environment back to, and it's not always intuitive, right? You think, well, buy them when they're on sale, but from a trader's perspective, it's right here, things are dangerous. But if we can get up to 60.50, then that's an area where I think dealers start to get saddled with a lot more premium, right? We get up there, everyone's hammering out their cover calls, they're giving them all sorts of option volatility, and that's going to create a much more supportive environment that's going to clamp down on volatility. And then maybe we can then start to kind of grind our way up, if we get up there. Now, if is an important word here, and gamma in itself doesn't really cause problems. It can be an accelerant, it can be a decelerant to volatility, but we need that sort of spark. So we need something to kind of get us up there. Earnings season starting soon. Maybe that's the thing that gets us going. But we sort of pointed this out a couple months ago. We said, the beta to VIX of the VIX to S&P is just massive. And that's why I've been favoring you. I noticed you also picking some nice VIX trades as well, protective trades. Beta of the VIX to the S&P has been really, really high. And so you can see right here, this is showing exactly that. So when the market comes down 0.5%, 1%, 1.5%, we can see the reaction of the VIX. And here, since that August horrific week, we see that now whatever the reason is, maybe dealers are on edge since those days, but we now have this ability for the VIX to really, really react. And one of the charts that I like to show is, this was from about a month ago. And I sort of looked at this and I went, boy, look at the steep skew on the upside calls in VIX versus the month previous. So what that means, there's a few ways to interpret it, but basically people are pushing up those out of the money calls, which is what you want to own if you believe there's going to be a severe sell-off or a crash, right? You want to own upside calls, which is a little different from owning downside puts in the S&P. In the VIX, you own upside calls when you want to play for that crash, for that big sell-off. And this either means that people are super, super hedged, or dealers are going, you know what, I can't sell any more of this stuff. So that probably has something to do with August and early September, where risk departments are going, listen, you cannot get into an ugly situation like that again. You have to, if you're going to sell this stuff, you better sell it for a whole bunch of money. And as a result, you can see dealers are already short a lot of calls in the VIX. So I think that continues to be an interesting place to place our bets from a hedge perspective, or even just if you want to create some alpha from a sell-off as a trader. I'm sort of talking about selling, Feb, I might move to March soon, but Feb 15 puts, 16 puts to buy some upside calls. That's what I'm sitting in right now. I'm out a little bit of money on those, but I think they set up quite interestingly. If you think that the next month or so might be a little bit concerning, and there's certainly a lot of catalysts that we could be looking at that could cause some problems, that's where we are. Now, from a gamma perspective, here we are. We can see this sort of red square down here. This is where we are. So this isn't rocket science. When I say below 59.75, this is where we have pockets of weakness from a gamma perspective, where volatility could continue. We've seen it a number of days this week where S&P is up 70, 80, and then it gives back a good chunk of that. Again today, we rallied back, so that was nice to see. But if we can get up into this sort of 6,000 plus territory, that could do a lot for us. But gamma's a really big thing. From December 30th to right afterwards, we saw one of the biggest drops in gamma that we've ever seen. Only August 5th was from pre December 30th. To afterwards. So a lot of gamma kind of disappeared there. And so now you have this, they say the largest 4-day change in their data set ever in terms of going from positive and flipping down to negative. So they've gone from positive 12 billion per 1% move when you're positive, you basically have 12 billion to buy, 12 billion. That's very supportive. This is an area where there is that possibility that you kind of can't trust the rallies, and maybe you can't really trust the sell-off. So we have to get used to this volatility until we get down. And I think that happens maybe around 60.50. where maybe things calm down a little bit. Here's your return
I love
contribution.
how you said that, by the way. You can't trust the rallies, you can't trust the sell-offs.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.